Without any major economic news bites hitting us over the last few days, this week has been rather green as the S&P continues to notch higher to close out the week. Perhaps it's really true. No news really is good news, but this all also means that buying opportunities are just harder to come by. So I personally went on a little bit of a hunting spree and found 3 dividend stocks that I wanted to bring to your attention. But talk is cheap, so let's get right to them. Now, as I mentioned, the S&P has been climbing on the week, and if I'm being honest with all of you, while I make it a point to dollar cost average into certain positions every single week, I try to avoid investing on green days, unless of course there are really stock opportunities that I feel are worth the buy despite all of the market sentiment, whether positive or negative. And today, I'm pitching 3 dividend stocks to you, but come to the end of this video, I want your feedback on each of them, so just be sure you drop your 2 cents on all of these dividend stocks in the comments. But without further ado, and in no particular order, let's get to it here with the first dividend stock being Illinois Tool Works, ticker symbol ITW, which is in the business of manufacturing all sorts of welding equipment as well as certain consumables that are all for welding applications. Now, in other words, this is a company that I'd like to say is not so sexy, but it remains a necessity in our everyday lives without us really knowing it, making it quite a lucrative investment, as we can see a decade's worth of performance here, rallying up to over 263% worth of appreciation. But zooming into just this year, we can see almost a 4% let up thanks to our economic environment, with the stock trading now for $250 per share. But looking into the future, which is what matters, analysts remain optimistic here, with a consensus rating notching up to $258.73 per share, all while smart money continues to ramp up their buying activity with this welding giant. And to further increase the value, Illinois Tool Works has been buying back their own shares pretty consistently here, with the latest purchase back in March totaling over $362 million. And just for holding on to this stock, you're going to reap some benefits with a growing dividend. The current yield is sitting at 2.23%. That has been shelled out for the last 52 years, all while growing by an average of 13% year over year for the last 20 years. And while on the topic of manufacturing, precisely because of our economic environment and the probable let-ups in sales for all manufacturers across the board, Fastenal, ticker symbol FAST, is also looking rock solid right now, given the nature of the company manufacturing fasteners. So think nuts, bolts, as well as all types of construction materials that are needed. Now, Fastenal is actually the largest manufacturer of its kind in North America, which boosts its safety rating in my book, but quite similarly to Illinois Tool Works, it is in the red right now, trading for just $66 per share, thanks to poorer earnings. Yet zoom out here to see the big picture of almost 260% worth of appreciation and a very notable purchase from an insider at the director level as of its recent dip. Now, that is certainly a positive indicator, but until we actually get the analyst forecasted share price of $71.20, which is just about 6% worth of upside, we can go ahead and enjoy the Fastenal dividend coming in at 2.34%. That has been steadily paid out for the last 32 years, with an average growth rate here of 22% over the last 20-year period. Now, investors, I have one more dividend stock for you. I'm pretty bullish on it, but before I actually cover that dividend stock, I want you to make your real first chess move here in leveling up as an investor by making sure you're subscribed to the channel, which will give you all the latest market insights and stock ideas. Now, while you're at it, I want you tapping on that thumbs up button just to let me know that you're actually finding value in these 3 stock rec videos, so I'll keep making more of them just like this for you. With that, dividend stock number 3, the one, the only JP Morgan, ticker symbol JPM, which is America's banking gift to the world, operating the largest bank within the United States and having quite a hefty footing around the world. Now, when it comes to recent news, Jamie Dimon, the head honcho, the chief brains behind all of JP Morgan's success and growth over the years, has been alluding to retirement here. As we can see, he said in the first time for a while the timetable isn't 5 years anymore, meaning he's getting closer to retirement, which raised some eyebrows and concerns as to who's going to be up to bat next, but ultimately creating some jitters here. We could see that the stock slid this past week to $195 per share. Now, we're still up on the year here, as you can see, but Jamie Dimon's fortress, as we could see over the last decade, up 368%, worth of appreciation there, and hopefully that will all continue for the next decade to come. Now, analysts are certainly bullish on JP Morgan, forecasting a share price to hit $214.66. That's almost 10% worth of upside from where it is now, and until then, a nice chunk of a dividend will come in from JP Morgan with a yield of 2.35%, growing by about 6% per year, though cut every now and then, just given the nature of the game in banking. But there you have them, from Illinois Toolworks to Fastenal and JP Morgan. Drop all of your thoughts down in the comments below. Let me know if you have these within your portfolio or if you have other dividend stock ideas in mind. Now, don't forget to subscribe just before clicking right here for all of my latest.